the same systems I'll use today. That was the last slide of the presentation. Let's start with a look at the global markets, starting with Australian index AXJO. For the global markets, I'm going to use Q Global running on MetaStock, and I'm using the standard weekly daily at a glance template. In the weekly chart, we have a series of indecision candles. Bearish indecision at the top. There was also a bearish headwind signal, possible reversal signal. Since then, the backdrop candle color is bearish magenta. As of today, price has come below the trendline support. In the daily, price is inside a triangle pattern just outside the first trendline support. There is another trendline support below. If the second trendline support is also broken, then long position holders may be cautious and there may be an opportunity to short individual stocks. Right now it is in an uptrend in the longer term. However, at the right edge, it is looking weak while still moving sideways. Let's look at the Japanese index topics. In the weekly chart, the trendline support is providing good support. This week's candle shape is bullish, though the color is still magenta. In the daily also, the trend lines are providing support. Today's candle is an indecisive, very small body doji candle. Even if price comes down from here because of the trend line supports, we are not going to take any short trade. If price continues to go up from here, then there is an opportunity to take long trades in individual stocks. In a longer term period, over a longer term period, it is still in an uptrend. China market CSI 300 index. To reconnect again. Let me try to open again. Change to CSI 300. No. Let me close MetaStock and open again. Some connection issues. Sorry about that. Let's try. Change the symbol to CSI 300. Okay. In the last few webinars, I explained that CSI 300 was relatively weaker compared to Australia and Japanese index. Price came down sharply for 4 weeks, including the bullish backdrop color candle that was indecisive shape candle. Then there was a bearish headwind, backdrop color turned bearish, and price continued to drop. Now it is right at the trendline support. So this is not the time to take short trades. The time to initiate short trades might be when in the daily price created a false upside breakout and the backdrop color, in the daily the flow color turned bearish magenta. At that time, individual stocks might be shorted. Now price has dropped significantly from there and it is right at trendline support in weekly. This is not the time to take new short trades. if anything, we may look for buying opportunities if CSI 300 bounces up from the weekly trendline support. Over longer term, this is also in an uptrend. Though at the right edge it is indecisive, I explained in the previous webinar also, when price goes from the upper boundary straight to the lower boundary, then the direction is not clear. So it is indecisive move now. However, that is okay for a bounce long setup. Bounce long setup is expected to be taken after a sharp and sudden drop which has taken place. Now if price can go up, it may give rise to bounce long setup. Let's look at the UK index, FTSE index. In the daily, it was inside a triangle pattern that is continuing. Direction is not clear. Weekly is right at the trendline resistance. So we'll avoid taking any trade in FTSE right now. Lastly, India's Nifty 50, that used to be the strongest of the global markets, and that is continuing. In fact, if you look at the weekly chart, doesn't look like a whole market. It more resembles a high growth stock, isn't it? From the low of March 2020, it went up more like a high growth stock, not like a country index. At the right edge in daily, it is inside the triangle pattern again. We see several market indices are inside triangle patterns now. That is showing that at least for the time being, some of the global markets momentum is reducing. It is still in an uptrend, but upward momentum is reducing. Nifty 50 will not give any short trade anytime soon because there are many trendline supports nearby. This is indeed very bullish, the most bullish of the global markets. Now let's look at the USA market. For that I will use Q Elite running on TradeStation. Let me close the MetaStock charts. Let me use the market ETFs. This is S&P 500 ETF SPY. Right when price was near the daily trendline support, I suggested buying, and I did buy some stocks. I shared some of the buying ideas at that time. In fact, I even shared some buying ideas on this red candle. On that day, price bounced up from the trendline support. I have already booked profit in some of those trades, at least partial profit. Now at the right edge, yesterday, we have an indecisive shape candle in daily. The weekly color is still bearish. Therefore, I am not going to take any new long trade now. I am part of several chat groups, forums, etc. and I saw yesterday people were starting to buy stocks. However, I was not buying yesterday. I was booking profit in some of the trades that I took on this day or this day. Did I take any new long trade yesterday? I'll have to check that. But the Q technique is to start buying at the swing low, and in this case I could very nicely once again use the trendline support. IWM, the weekly is continuing to be bearish in color. Price recovered in daily from the yellow direction line. That was the time, the swing low point, that was the time to buy. Now if you see, though other people were probably buying yesterday, I noticed it came to a trend line resistance in daily, created an indecisive shape candle. That was a warning signal for me. I was not going to buy yesterday. QQQ. Again, backdrop color is still bearish. Price went up but came near the trendline resistance. I was not going to buy many stocks yesterday, even tech stocks, though Nasdaq recovered a lot yesterday, NDX. I was not going to buy yesterday those tech stocks. Maybe I could have bought some, but not many, looking at the imminent trendline resistance nearby. And remember, in the earlier market roundups, when I explained the go with flow short setup in IWM, I took that trade also. I categorically mentioned that I was not going to short DIA because of the weekly memory trendline support. That was extremely useful. DIA recovered very well from the trendline support. In fact, made a new all-time high on this day. Closed lower, but on an intraday basis, made a new all-time high on Monday. Tuesday also tried to go up, but reversed. If you look at the candle shapes of Monday and Tuesday, they are bearish, and both of those days have displayed the bearish indecision at the top signal. In the weekly also, we have a bearish indecision at the top. At the same level, 1, 2, 3 weeks ago, we had a bearish indecision at the top. So that is showing that though DIA is relatively the strongest now, Q traders like me are looking to short industrial stocks now, Dow components. In fact, if I clear the chart, in the daily, let's study again, there was a bearish headwind at this point, right after DIA made a new all-time high. That time the flow color turned bearish, then price moved down, recovered again, then it created bearish indecision at the top for 2 successive days, and both of days also created a false upside breakout. Because the traffic light color is green, DIA itself is not giving any box short setup. I'm applying the unambiguous checklist in my mind. Box setup requires a non-green candle in daily, and it also requires a non-cyan candle in weekly. Those requirements are not met, though it refers from watermark resistance with high volume. It doesn't have a box short setup, however, individual Dow component stocks may have short setup right now, either box setup or headwind short setup probably. Because when DIA was going up, those stocks might have also gone up, some of them maybe at the extreme high. And when DIA created a false upside breakout at watermark where bearish headwind came earlier, it's likely some of those stocks are giving shorting the top opportunities. You may drill down into Dow components and look at them. Yesterday market recovered, especially Nasdaq recovered very well, but just as I explained using the market ETF charts, I was not going to buy, and probably no Q trader, those who are following Q techniques, were going to buy tech stocks yesterday. Not many, at least. There were some buying opportunities, and I may look at some of them. But the fact that QQQ was near memory resistance, IWM was also near memory resistance, DIA creating false upside breakout, those were warning signals. Another warning signal that I shared on Twitter was using Q edge. I tweeted on March 9th, yesterday, at 11:18 Eastern Standard Time AM, 11:18 AM Eastern Standard Time. Today's market is bullish, and if you follow me on YouTube, that is exactly what I predicted in my weekend market roundup. And I follow several other people, several forums. I was probably the only person, or maybe one of very few people, who suggested buying stocks in the weekend market roundup, very few. I was again accurate in my prediction. Market went up, and I was probably accurate because of the holistic nature of Q systems. Not that I have a crystal ball, but I use the holistic nature of the Q system and the techniques. And I bought some stocks at that time. And what did I tweet about yesterday? That I bought during the weekend or as of Friday's close, and now the bucket analysis is showing it is getting overheated, and I'm starting to book profit while others may be starting to buy stocks. And that I came to decide based on the bucket analysis. This bucket analysis divides all the stocks in S&P 5, not 500, S&P 1500. All the stocks are divided into 12 buckets, 1 to 10, the normal price range of the S&P 1500 stocks, and then one extreme low and one extreme high. I saw yesterday in real time that the percentage of stocks in the extreme high, that is extended bucket, was 30.48%. That was a warning sign. Now if you see the whole picture, the market was still very strong as of that time, 11 say 11:20, 11:15 a.m. Eastern Standard Time. 91% of sectors were up, 82% of industries, 72% of stocks were up. 10 of the 11 sectors were up, only one was down, that was energy. So the sectors were very bullish, and industry stocks, everything was bullish. However, I could assess the overheated nature of the market from the real-time bucket analysis. This bucket analysis is useful, and the fact that it is real-time makes it, I would say, extremely useful. Like in this case, I started booking profit, and let's see what happened at the end of the day. I tweeted after the day's close, another impeccable timing. By the close, percentage of stocks in the most extended bucket actually came below the previous day's percentage. And let's look at a snapshot. The previous day's percentage was actually higher than the day's percentage, that is yesterday's percentage after market close. When I shared the initial tweet, the percentage of stocks in the most extended bucket was above 30%, and it closed at 12.4%. That was a huge drop, and I could book profit based on the overheated nature. And as you can see, the sector industry stocks also closed more or less balanced, slightly more bullish, you may say. Sector slightly more bullish than bearish, industry slightly more bullish than bearish, stocks slightly more bearish than bullish. 51% stocks came down, 48% stocks went up. Overall, you may say a neutral picture. That was a big decline from the strongly bullish picture I shared earlier around 11 a.m. Therefore, the real-time bucket could be used once again to perfectly time booking profits. You may review this aspect and use the buckets in your own trading in real time. You can make trading decisions based on that. That bucket exhaustion was another reason I was not going to buy many stocks yesterday. Now, if I look at the very useful 1 month to 1 day sector industry stock advance decline breadth, it is still bullish. Overall, we have to say it is bullish. 1 month has remained bullish, it seems like forever. 10-day is also bullish now. 5-day also bullish. 2-day bullish. 1 day yesterday is balanced. Overall, sector industry stock breadth is still bullish. see the technique I am using. It is bullish, but I booked profit based on resistance, memory trend lines near market ETFs and based on bucket exhaustion. And when did I buy those stocks? I bought them when market was down at trendline support and was starting to go up. That is the Q technique. Buy at swing low, sell when probably others are taking notice and starting to buy. Not sell everything probably, but at least book partial profit in the positions which has significant profit. What is significant profit? One way is to book partial profit when the risk distance is covered. I did that in several stocks. I could book profit when market was still bullish, and then at the end of the day it pulled back. But if we look at technical breadth, the weekly picture is still bullish. Using Q finder, the balance between bulls and bears, 77% of all signals bullish, 97% of strength signals bullish, 83% of continuation signals bullish, and reversals 47% bullish, slightly more bearish than bullish. The overall picture is bullish in the weekly interval. One concern once again, and if you are watching my videos and if you are using Q systems, keeping an eye on the headwind signals, you will always be alerted when the number of bearish headwinds is large. 69 bearish headwinds, only 2 bullish headwinds. Bearish headwinds are possible reversal signals at the top, bullish headwinds possible reversals at the bottom. Market recovered somewhat, and then a large number of headwinds are coming again in the weekly interval. Those may keep shorting the top opportunities. You may keep an eye. Let's look at the daily interval. Yesterday was very bullish. Again, all the pictures are bullish, but if you see, not reversal. Reversals are more bearish, and in the daily interval also the number of bearish headwinds, relatively speaking, is quite high, 114. Bullish headwinds 36. Market recovered and then it started to display bearish headwinds in both daily and weekly. That is another reason why I could start to book profit yesterday. Overall, we have to still say that the market technical breadth is bullish. Now let's look at the market internal. Some of the internals like advanced decline, new high low, up down volume, I prefer to look using the weekly interval. So I'll not look at it today. In the middle of the week, it doesn't give conclusive signal. Let's look at some other market breadth studies. First, the mega cap top 20. Weekly has trendline support, daily has trendline support. Again, if you are following my YouTube videos, right when price came to this day, I mentioned that it was likely the mega caps would bounce at least somewhat, and that happened. Much of the Nasdaq's recovery yesterday was due to the mega caps going up. And once again, one could anticipate that bounce because of the trendline support in daily as well as weekly. Mega cap top 20 has also displayed an indecisive shape candle yesterday. We'll have to see where it goes from here. If you look at the FANG stocks or extended FANG stocks, though they recovered, are they giving buying signals? Some of them may be giving. If we have time, we'll look at them. Let's look at, I'll not look at the percentage MA or up down volume, etc. They are not giving any signal right now. Let's look at the total view instead. Earlier, when it displayed the distribution count of 3 in this total view, what is this total view? It shows the market breadth combining insights from 2 composite indices, Nasdaq, NYSE, and 4 major indices, S&P 1500, 500, Nasdaq 100, Dow Jones. So from single picture, we get a lot of insight in terms of accumulation distribution, also in terms of percentage MA calculation, and this very useful summary counts at accumulation and distribution counts. When the distribution count was 3, I was cautious, and then an accumulation count of 6 came, and I tweeted at that time that it may be a sign of exhaustion. I was starting to short. Price came down after that. Right on this day, several market ETFs were near trendline support. I booked my profit in shorts like the IWM go with flow short that I took, and I started to buy stocks. And I shared all of these ideas through forum or Twitter. As price went up for few days, I saw yesterday market ETFs came near trendline resistance. Some of them bucket analysis was showing exhaustion. There were a number of bearish headwinds in both weekly, daily, and yesterday I started to book profit in the long trades again. That is how, using Q technique, we are able to precisely short the top, book profit at the swing low, buy at the swing low, and start to book profit when price goes up. This market breadth total view is not giving any signal yesterday because there is no accumulation distribution count. If we see the percentage MA calculation, and this is again aggregate total view, the percentage of stocks where 50 MA above 200 MA has rolled over, just about rolling over the average line. Stocks above 50 MA recovered but has not come near the average line. Same is true for stocks above 200 MA. Therefore, though yesterday the market, or let's say Nasdaq 100, recovered a lot, internally it was not strong enough to get the percentage MA calculations to the average lines. And we saw from Q edge earlier that the day actually ended balanced. It was not really bullish, the entire market breadth. So those were insights in real time that helped me to book profit instead of taking a lot of new trades. I did take some trades, and let's look at some of them. QH can be used for top-down analysis. I don't have time to use all the features of these powerful systems every day, but let's do a top-down analysis today. And during market hours it can be done in real time. Even now, every time it can be done in real time. Of course, market is closed now. Now real time offline will be same. I came from the market view to the sector scorecard. Here I have the 11 sectors scored across 12 months depending on their, or based on their relative strength. Strength is colored in cyan. All Q systems, bullish or strength is shown in cyan or green. Weakness or bearish colors are red or magenta. So these are the relative scores across month 1 to month 12, and because we trade in recent days, after month 1 the frequencies are more, 10 day, 5 day, 2 day, 1 day, and during market hours the real time column will also fill up. So I can sort by any column by double clicking on the column header. Which two sectors were strongest yesterday? Infotech and healthcare. And they were very weak just a while ago. So yesterday this could be taken as turnaround candidates. Now QQQ recovered significantly, but it came near trendline support. We could look at Infotech stocks also, but looking at the fact that QQQ is at trendline support, let's look at healthcare stocks. Healthcare stocks had been weak for a long time. Let's drill down to the underlying industries. I'm doing top-down analysis. So I found a strong sector. I drill down into the underlying, sorry, I clicked something. Let me go back to the healthcare industries. From a strong sector, healthcare, I came to the underlying industries. I'm sorting by the industry relative score now. And now I'm looking at industries, the same scorecard as sector scorecard, but now it is for industries. By the way, other than the strengths from real time to 12-month period, the pace columns are there to show acceleration in cyan color, deceleration in magenta color. I can look for buying opportunities either based on strength or based on acceleration. Sometimes you may find both. Let's sort by strength for now, and I'm going to highlight the rows which are in bold case. Those represent the top 20% industries, not only in healthcare, across all industries. These are top 20% of all industries. And if I highlight the rows, you can see several of them are having excellent acceleration also. So let me select only those that are having not only great strength, turnaround candidates, as you can see, based on 1-day score, but they are also accelerating. So I'm going to choose only these three. And I'm going to look at in fact, healthcare services is also looking good. The strength is so strong over 2-day and 1-day both. Let me select this also. We can buy either based on strength or based on acceleration. We don't need both. So let me select this and drill down into the underlying stocks of all these industries in one shot. I could drill down from one industry at a time, but Q Edge also allows us to drill down into multiple industries at the same time. That's what I did. Now I am left with all the stocks in those healthcare industries which are strong yesterday. Top-down analysis. Now when I buy stocks, I buy based on either valuation or earnings growth. And you are able to filter in real time using these smart filters. Some of them are combo filters which looks at both valuation and growth, or you have individual category filters like this is for valuation. These filters are for quarterly earnings growth. These smart filters for yearly earnings growth. Then for short squeeze potential, nearby earnings, and then a few options for sorting. Like many of you, I like to buy high growth stocks. I could look for high growth stocks using the quarterly earnings growth or yearly earnings growth. Because my personal swing trades are shorter term, I may not want to use the yearly period so much. Not for short term trading, I like to use the quarterly period earnings growth, the latest quarter one. If I wanted earnings growth in 2 successive quarters, I could use the 2 button. If I wanted earnings growth in 3 successive quarters, I could use the number 3 button. And if I wanted 4 quarters, that would be equivalent to 1 year, then I could use the 1 yearly earnings growth high button. But instead of using any of them, now I'm going to use the extreme high earnings growth button, because I know I am doing this analysis every day. Probably you are also doing. You know, healthcare has some high growth stocks and they pulled back recently. When they pulled back, even after very nice earnings growth in the quarterly earnings result, I was already starting to look for buy setups, but that buy setup didn't come. One example was QDEL. Remember I discussed QDEL earlier. Let's divert a little bit, look at QDEL. This was earnings result, and after that it had a huge gap down move. That time it might have some trend line support, and certainly the watermark support was there. So I was looking for buying opportunities, and I mentioned it in the weekend or week middle Wednesday's YouTube live session also, that if I had a bounce kind of long setup or box long setup, I would have bought the stock. Excellent earnings growth in QDEL, but it didn't go up, so there was no box or bounce long trade setup. And after that it came down further. You can see this newly released bullish indecision at the bottom candle. Very useful. I mentioned earlier, you will find them extremely useful. They appeared right when in the weekly price came near this watermark resistance. In any case, there was no trade set up at that time. Yesterday we had a bearish shape candle, though there is a bull release. Therefore, we have no trade set up. But I knew that QDEL is a healthcare stock, extremely high earnings growth. Still, it dropped after earnings, and still it has not given a buy setup. I knew that, you knew that, and this was not the only stock. And these are extreme high earnings growth. And because I know that, and you know that, I am going to use the extreme high earnings growth smart filter. Let's see if we find buy setups there. The one that comes to the top is FLGT, Fulgent, and you probably all know that. Long time ago, I shared it as a buying candidate on Traders Forum, probably before most high growth traders noticed it. Why don't we? Let's see if we can find that out. I'm searching for FLGT. September 25. No, this was Vire, a very good one. This one. Let's look at this. September 22. This I shared September 22, 2020. And see the Q360 degrees analysis that I carried out, and I always attach the snapshots before knowing the result. I think everybody can look at previous charts and show how one could buy and make a lot of profit. But there is some non-ingenuity in that. In real life, trading is not like that. That's why I consciously avoid doing that. I only share ideas before knowing the result. And this was 22nd September 2020. This is what I saw at that time before knowing the result. The industry was strong. It was not of great valuation, but even at that time, see the three successive quarterly earnings growth: 500%, 50%, 183%. There was a short squeeze potential. At that time, the stock went up by 9% one day. And this is what I saw. Price pulled back, gave a bullish shape candle in weekly, and in daily it pulled back. It was starting to go up from trendline support. So it gave a pullback kind of setup. What was the price at that time? You can see here 34 point something. 34 point something. Actually, this I shared on 19th September 2020, and I followed up with the forum post on 22nd. That was when price was 34, around that range, when I first shared it in the weekend market roundup. Now let's look at Fulgen. From 34, it went to almost 200, and now it pulled back to, from 200 it came to 80, came to the yellow direction line. Earnings were somewhere here. You can see the dollar symbol, and then it started to go up again. So some Q traders who are longer term holders, they could have bought it based on my analysis, and they could also carry out the same analysis using Q systems around 34, and I know some of them probably held it all the way up. Now Q traders would also protect profit, so when it started to come down sharply, they could employ different stop out rules to protect profit. And most experienced Q traders would have done that. They would not let a $200 stock erode to $80. And now they are going to start to buy again. And I shared a post again I think yesterday. Let's look at that. FLGT. Why I am looking at it using the post is because I didn't share it at the end of the day. I shared it at 10:50 a.m. Eastern Standard Time yesterday, and you see how you can use the real-time nature to identify strength in every aspect. Fulgent's industry, life science tools and services jumped up in relative score, and in absolute percentage also it reversed from almost minus 3% one day ago. In real time it jumped up to positive almost 4%. So that was a reversal of 7%, about 3% down to 4% up in one day, about 7% jump, and the relative score jumped up from 4 to 139, one of the strongest. And I could identify this strength in real time. I looked at several stocks in the industry at that time, and I saw in real time in the morning session Fulgent was giving a pullback setup. It was up by 9.7% at that time. This was the relative score from QH, extremely strong with acceleration. And this was fundamentals. Extreme high earnings growth in the last 3 quarters. 96% of peer stocks were up when I shared the snapshots before 11 a.m. Eastern Standard Time. And this was the chart at that time. It pulled back, regained the yellow direction line with a bullish color candle. It was starting to go up with high volume. The weekly shape was bullish. That was a pullback setup, and we could identify the trade from Q Sonar on TradeStation, or we could use also Q Finder on MetaStock. That was the time when the stock was up. You can see here 9%. And how did it close the day? FLGT, you can see here it closed by almost 16%. So even after I shared the snapshots, it went up further by about 6%, more than 6%. Using real-time chart, real-time industry sector rotation analysis, real-time sonar, you could identify and probably take a position. As I mentioned, I was not willing to buy many stocks in technology areas yesterday because QQQ was near trendline resistance, but I did not mind if I wanted. I did not mind taking a position in FLGT, extreme high growth stock, and I could even buy it with short put, meaning that I am willing to hold the stock if it goes down. In those cases, you could of course buy the stock also, and you could also, if you wanted to hold the stock if it came down based on its fundamental strength, and looking at QH thinking it is going to turn around, the industry is going to turn around, you could also short the put. But I don't suggest shorting the put unless one is willing to hold the stock. I might have shorted the put in FLGT. You could find it from Sonar, or you could find it from the top-down analysis. If you found it from Sonar, that would be bottom-up, and if you used the top-down analysis that I am showing now, that would be starting with QH. So FLGT was one stock you could buy, and you can see several other extreme high growth stocks also went up in these healthcare industries. You could look for buying opportunities in them as well. You see QDEL is there, also a very high growth stock. Not only that, it has excellent valuation also. That's why I am continuing to look for buy setup in QDEL. It has not come yet, but once it comes, I will be taking that confidently. I'll not look at the remaining stocks. You may keep an eye on them. Let's look at some other stocks. I shared one stock recently, NNDM. I used to work in an Israeli company earlier in technology areas. Some of the Israeli companies, the ones I know, are very innovative. Though this particular stock, this particular company I didn't know, but I saw from Refinitiv that it's an Israel-based tech company, NNDM, Nano Dimension. And see how I identified the trend. It was in an uptrend. Interestingly, displayed a bearish headwind right at the top, dropped sharply. Where did it stop? Right at the trendline support. Then it displayed a bullish indecision at the bottom. And when I shared it, it was starting to go up. As of that time, it was up by 14.95%. Again, you could find this stock from many different ways, using top-down analysis, bottom-up analysis, both ways, or maybe even fundamental first. This was giving a low-risk buying opportunity because it was bouncing up from trendline support. And if you bought it, one question that I ask myself whenever I am buying a stock, and that's the Q guideline, is what technical setup am I using? Of course, fundamentally the stock is to be strong, or it has to be some innovative technology stock. Industry has to be strong unless it is biotech. Biotechs can go up by itself a lot. And then technically we have to have a proper setup. And always I ask before buying, is there a setup? And that prevents me to a large extent to break my discipline. And what setup was in this stock when I shared it? That was a bounce long setup. Every Q trade setup has a standard checklist, and bounce setup says these are the checklist conditions. It has to drop sharply and suddenly, come to a pre-existing trendline support and start to go up from there, and it should reverse with high volume. Those conditions were true on the daily chart. Bounce does not have any requirement on the weekly chart. This memory resistances work extremely well. So this is an exhaustion based trade setup, sudden reversal. That's why the stop is narrow. Let's see MMDM today. I followed up later with a snapshot, and I showed that the day when I shared the initial idea, it actually pulled back and it closed at about 6.7% up. But it was still trying to go up from the trendline support. Did it confirm the bounce setup as of the day's close? No, it didn't confirm the bounce setup because bounce setup requires a bullish shape candle. That was not true at the close of the day. This is of course the magnification. So if you try to take the bounce setup at the close of the day, you don't take it. But I'm in Asian time zone. I live in Thailand, so I might have taken a trade early. Nowadays I'm trying to sleep a little bit early, not wait till 4 a.m., 4 p.m. Eastern Standard Time, which is 4 a.m. my time. So I might have taken a trade early, and let's see how FLGT closed yesterday. It's not FLGT, NNDM. I was starting to buy the stock when it was starting to bounce up from trendline support. I actually took a long position on this day before the market closed. And why I did that? Because I'm in a different opposite time zone. I always say the people who are living in the USA or in a time zone close to the USA time zone, they have an advantage. They can apply the checklists properly near market close and decide to buy. Sometimes I buy beforehand in anticipation, as I did in this case. However, the stock still went up yesterday. It went up yesterday by how much percentage? You can see here 19.2%. So I took an early entry. I would not have taken it if I applied the checklist at the end of the day. Because of different time zone, I took it, and yesterday it went up. It had significant profit, and I had multiple positions in this stock, if I remember correctly. Sometimes I mix up the different stocks. If I remember correctly, I had short put and also long stock positions. I might have booked the long stock positions, quick short term profit, and I may be holding the short put positions. NNDM. Did I look at the fundamentals? Sometimes it is a high tech stock. I may ignore the fundamentals, but let's look at it. NNDM. Technology, hardware, storage, peripherals. How is its industry? Industry was weak in the middle and then it strengthened. Base columns are showing acceleration. So the industry allows me to buy, and it is retrieving data from Refinitiv. Let's give it a few more seconds to calculate the scorecard. Not enough data. So this may be a relatively new stock. Net and data on earnings growth. Short squeeze potential is there. Yesterday it went up by 19.25%, and you can see trying to go up after a decline earlier. And that is the situation when I apply the bounce setup. This was a very good anticipation of the trade. Of course, if you are observing the stock regularly, you might be even more accurate. You could try to buy right when it hit the trendline support and reverse from there. Right at this point, you could buy it, putting stop below the day's lows. I didn't do that. I entered it next day and I booked partial profit. In NDM, a stock, again, I shared the idea before knowing the result on my forum. And of course, few more stocks that I shared earlier. One was CYH, and this was one of the stocks that I shared when SPY was still down. Let's look at SPY again. Why don't we look at the post? It is very useful to look back at the posts and see the snapshots when I shared them. This is March, so which one is that? Maybe this one. 5 days ago I shared it. March 4th, I shared buying ideas on two stocks, KR and CYH. Which day again? March 4th. If I look at SPY on March 4th, that would be this down day, red down day. I mentioned earlier that I was starting to share buying ideas from this day itself when price was bouncing up. Didn't even wait till the next day. And these are the two stocks I shared at that time. CYH was one of them. And CYH on that day gave a pullback setup. It also touched memory support, bounced up from memory support with extreme high volume, also a pullback setup. How was CYH chart at that time? This is how it looked. Stock was going up, pulled back, regained the yellow direction line. Even more importantly for Q traders, bounced up from trendline support, bullish shape, high volume. Weekly bullish shape candle, 3 long lower tails, 3 weeks in a row. So that was giving me a pullback long setup. And I took a long position at that time. Let's look at CYH today. The more you follow the trade ideas on forum or carry them out and log them and observe how they are doing, you will start to fine tune your entry more and more accurately. So this was my entry day, the day I shared the idea. Yesterday when price came to the day's high, I had a short put again, I think. Short put position in the stock. CY is fundamentally very strong. Let's look at that also. CYH, while it is loading, let's go back to the chart. Yesterday when price came to the day's high, the short put vertical hit the profit target, 50% of max profit. Usually I put a GTC order for all my naked short put positions at 50% of max profit, and that order was triggered. Did I share the? Yes. So sometimes I share it as example. See, I took the trade on 4th of March, and let's study what expiry did I use. I wanted to give enough time, about 40 days, 45 days. So when I exited yesterday, it still had 38 days to expiry, but when I bought it, it had about 45 or something days to expiry. So in how many days? 45, 38, about, let's look at the chart in how many days. 1, 2, 3. In fact, only 3 trading days. Not 3 calendar days, but in 3 trading days, the trade hit my profit target. I took short put. What strike did I use? Short put 8. 8. And let's look at the chart again. When I took the short put position, the closing price was 8.78. If you are looking at the pop-up dialog, 1, 2, 3, 4, fourth number from the bottom, the closing price was 8.78. I chose 8 strike. Why 8 strike? The trend line support was right at 8 price point. So I chose short put 8. I had very high confidence that these memories would hold. And if they didn't hold, I would be ready to hold on to the stock and maybe even sell some call against it to lower my price level. But I didn't have to do that in 1 to 3 trading days. Though my days to expiry was about 45, in 3 trading days, it hit my profit target. I shorted the put at 2 different price levels, price entry prices, 70 cents and 85 cents, and I closed at least partial profit at 50% of max profit. Now I'll make sure if I am holding any position that also exits with a good profit. Once again, this trade also exited in 3 trading days. That's why the more you observe the trades I share, or if you are following the same swing trading technique, you will notice most of the time we exit the trades within 5 to 7 trading days. Still, again, why I came to this explanation of the actual option, I wanted to explain what was my strike choice and why. That was based on the memory support. What was my expiry, day to expiry? It was about 45 days, and even then I could exit it within 5 days. I want to have enough time in hand, don't want to short the put with only 7 days to go or 10 days to go, enough days in hand. But you can see, as in this case, the trade should exit very quickly once it goes in our favor. And how was its fundamentals? A star candidate, as I say in Q technique. Excellent valuation, very high earnings growth, more than 100% in the last quarter. In fact, more than 100% in the last 3 quarters. Great earnings quality, short squeeze potential. Because this was a star candidate, I was willing to take the trade with short put, that is willing to hold the stock if it came down, and I got assigned. Again, a trade that I shared before knowing the result. Now these are bullish trades. Now let's look at some stocks and look at the bearish headwinds. Remember, we saw, I know we are at 1 hour point, give me 5 more minutes. I think this may be of interest to you. We saw a number of bearish headwinds coming in multiple charts, and recently I shared on a tweet and showed that FFTY, the IBD 50 ETF, displayed a bearish headwind right at the top, and then it dropped significantly from there. If we look at Tesla, displayed bearish headwind right at the top, and since then it dropped. The more you observe these charts, the more you start to incorporate bearish headwind signal in your trading routine. And of course, you may also use the trade setup when all the checklist conditions are met. Now, on this day, how many people would think of shorting Tesla or FFTY, for example? But those work well when the setup is confirmed, because the loss is very narrow, stop loss is very narrow. Now, I showed you that DIA, though it was the best performing ETF in recent days, created a false upside breakout at the level where bearish headwind came earlier. In weekly also a bearish headwind came. Now number of indecision at the top candles in both daily weekly. So one way to look for short the top, maybe headwind signals at the top, and you could look at Dow components. Why don't we do that? Let's use bottom up. Let's drop the Dow Jones Industrial Average components, remove the index, and let's look for headwind signals. Give it a few seconds to populate, and I can see two stocks have headwind signals, bearish headwinds. One is Dow, one is DIS. Let's look at DIS. Why I am choosing DIS? Because I am reading all the signals from the row. And what are the signals I can see? First of all, Disney closed by lower by minus 3.7%, whereas Dow by minus 1.9%. So on a closing weakness basis, Disney is weaker. Both of them have bearish headwind signal, probably a bearish headwind setup also. We have to check the charts. But Disney also has a possible box setup. Dow doesn't have it. Disney has bearish U-turn, bearish pressure. Dow doesn't have it. Both of them are pendulum high. By the way, Disney also reversed with extreme high volume. So when I look at these two rows side by side, both are weak, but Disney is more weak in terms of Q bearish signals. That's why I want to look at Disney. Okay, they're not linked. Let me type the symbol. How we read the chart? In the weekly, it has a bearish indecision at the top, neutral color, bearish shape. There is a trend line support, but that is some distance away. Probably enough distance away for a short trade using daily interval. And let's look at the daily. There was a bearish headwind here that created a watermark resistance. Price tried to go up above that. Yesterday reversed sharply, creating a false upside breakout, and bearish headwind came again with bearish shape color, bearish shape, bearish color. In fact, if you applied the checklist conditions, it not only gave a bearish headwind signal, but it also gave a bearish headwind short trade setup. Bearish pressure, bearish U-turn, very high volume at pendulum high. In the overnight market, it is up by 1.1%. That is in fact good. If I see that it is opening somewhere here, and then I will switch to fine-tune chart. Using fine-tune chart, if I get a short setup, I wouldn't mind taking it. That is how, just like I showed you FFTY Tesla, you could start to look at shorts at the top. You could start to look at shorts at the top in Disney right now. Of course, I will look at its fundamentals and industry strength also. Why don't I look at that? If the fundamentals are strong, I don't want to short it, because there are plenty of weak fundamental stocks that are giving short setups. If not today, tomorrow. If not tomorrow, day after tomorrow. I don't have to risk my money unless a stock is a 360 degrees trade. 360 degrees trade means it has to be weak in every way. It's a Dow component. The DIA is giving me some reason to short one of its components. Disney itself has bearish headwind setup. Let's look at its industry, movies and entertainment. Excellent, no? In one glance I can see, and you can see it was strong earlier. one of the strongest, and now it is one of the weakest, showing deceleration. So the industry allows me to short. Let's go back to the stock. Fine, great. Medium valuation, negative earnings growth for 3 quarters, 3 years. Earnings quality is also poor. Secondary valuation, magenta. Revenue growth, negative 3 quarters. So I am happy to short this thing. The more you observe my trading technique and the examples I share before knowing the result, you will see how confidently I can, and therefore you can, buy stocks when others are still bearish, like CYH or NN, what is that? Nano, NNDM, or CYH, or PFSI, another stock, finance stock that I booked profit already using short put. I could buy at swing low, and this is exactly how I can short at swing high, probably before others take notice. That is because of real-time nature of the systems and the very unique, or to some extent unique, you may say, the reversal setup that we have, like headwind setup. Pound setup also works great. So I'll not take more time today. I think there are nice opportunities both for buying as well as shorting in different industries. Thanks a lot for attending. I look forward to seeing you again in our next session, which will be during the weekend, either Saturday or Sunday. I'll let you know on my Twitter page. And you will come to know if you are following me on YouTube channel. Have a great week, and as I always say, no reason not to do so. Trade profitably. Thank you.